The moment 22-year-old Tyler Mason, wearing his Stanford MBA like a crown, looked me dead in the eye and said those words that would haunt him forever. "You are too old, Aspen. We need fresh blood." The conference room fell silent. 27 years of my life poured into this bank's technology infrastructure, and this kid who probably still had his mother doing his laundry was dismissing me like yesterday's newspaper. I gathered my dignity, stood up slowly, and walked toward the door. Little did he know he had just made the most expensive mistake in banking history. Walking out of that conference room felt like stepping off a cliff, but my mind immediately traveled back to where this all began. I was 23 years old when I first walked through the doors of First National Bank in 1981, fresh out of MIT with my computer science degree clutched in my sweaty palms. The banking industry was just beginning to embrace computerization, and I was one of only 3 people in the entire country who understood the revolutionary new OrionTech mainframe system. Back then, computers filled entire rooms and required teams of specialists just to keep them running. The OrionTech system was different, though. It was elegant, powerful, and incredibly sophisticated for its time. The bank had invested $12 million in this cutting-edge technology, and they needed someone who could not just operate it, but who could customize it to handle the complex world of financial transactions. I spent my first year living practically in the basement server room, learning every circuit, every line of code, every possible failure point. The OrionTech manual was 4,000 pages long, but even that did not cover the custom security protocols we developed specifically for banking applications. I worked 18-hour days, survived on vending machine coffee and determination, and slowly built what would become the backbone of First National's entire operation. The authentication system I designed was revolutionary. Instead of simple password protection, I created layered security protocols that required multiple verification steps, each one harder to crack than anything that existed at the time. I programmed fail-safes within fail-safes, created backup systems for the backup systems, and wrote code so sophisticated that it took other programmers years just to understand what I had built. By 1983, our OrionTech system was processing over 2 million transactions daily. Other banks started sending their teams to study what we had accomplished. I became the youngest person ever promoted to senior systems architect at First National, and my work became the template for banking security protocols across the entire industry. But what made me truly irreplaceable was not just my technical knowledge. I understood the business side too. I sat in thousands of meetings with loan officers, tellers, managers, and executives. I learned how money actually moved through a bank, how regulations worked, how different departments needed to communicate with each other. I did not just build a computer system. I built a digital nervous system that connected every aspect of the bank's operations. Over the years, I mentored dozens of younger employees. Fresh computer science graduates would come to me completely overwhelmed by the complexity of financial technology, and I would patiently teach them not just the technical skills, but the critical thinking required to work in banking. I believed in sharing knowledge and building teams, in making sure that the institution I loved would continue to thrive long after I was gone. The irony was not lost on me now. Here I was being dismissed by someone who would not have been able to find the power button on the systems I designed. Even as late as last year, I was still the person they called when something went wrong. When a potential cyber attack threatened our customer data 6 months ago, I spent 72 hours straight identifying vulnerabilities and rebuilding our defenses. The FBI Cybercrime Division specifically requested my assistance, calling me one of the foremost experts on legacy banking security in the United States. I had documentation for everything. 43 binders of technical specifications, security protocols, and system architecture diagrams filled my office. But more importantly, I had something that could not be written down. I had the institutional memory of how everything connected together. I knew which seemingly unimportant subroutines actually controlled critical functions, which backup systems would fail under specific circumstances, and which security measures could not be modified without triggering cascading failures throughout the network. The tragic twist was that Tyler Mason had no idea what he was throwing away. In his mind, I was just another aging employee taking up space and salary that could be better spent on younger, more modern talent. He saw my gray hair and assumed my brain was equally outdated. He never bothered to read my personnel file, never asked about my qualifications, never tried to understand what I actually did for the bank. What Tyler failed to grasp was that technology is not just about having the newest tools. It is about understanding how complex systems work together, how to solve problems when things go wrong, and how to maintain stability while adapting to change. These skills come from experience from making mistakes and learning from them, from watching systems evolve over decades rather than months. As I drove home that evening, my 27-year career apparently over, I felt a strange mixture of devastation and anticipation. Tyler Mason had just made a decision that would reveal the true value of expertise versus arrogance. The only question was how long it would take for reality to catch up with him. Tyler Mason had arrived at First National 6 months earlier, like a tornado in a tailored suit. His father, Jonathan Mason, had recently been appointed CEO after a corporate restructuring, and Tyler came with him carrying an MBA from Stanford and an attitude that everything at the bank needed immediate modernization. At 22 years old, he had never worked anywhere else, but he spoke with the confidence of someone who believed that youth and education were the only qualifications that mattered in the modern business world. His first week, Tyler scheduled what he called efficiency assessments with every department head. When my turn came, he spent the entire meeting staring at his laptop while I attempted to explain the critical importance of maintaining our OrionTech infrastructure. He interrupted me after 5 minutes to ask if I had ever heard of cloud computing. I tried to explain that while cloud solutions were excellent for many applications, moving our core banking operations would require years of careful planning and testing. The regulatory requirements alone were staggering. We were talking about systems that processed billions of dollars in transactions every day. One mistake could trigger federal investigations, customer lawsuits, and potentially even bank closure. Tyler waved my concerns away like he was shooing a fly. According to him, my thinking was exactly the problem with American businesses. We were too focused on maintaining the status quo instead of embracing innovation. He had a vision of transforming First National into a completely digital enterprise within 18 months. Over the following weeks, Tyler began implementing what he called strategic modernization initiatives. He hired a consulting firm staffed entirely by recent graduates from top business schools. These consultants walked through our offices with tablets and wireless headphones, taking notes about operational inefficiencies and legacy bottlenecks. The most frustrating part was watching Tyler systematically dismantle procedures I had spent decades perfecting. Our disaster recovery protocols, for instance, required manual verification steps at critical points. These steps seemed unnecessary to someone who had never experienced a major system failure, but they were based on hard-learned lessons from previous crises. Tyler eliminated these safeguards as bureaucratic obstacles to rapid response. When I tried to explain why they existed, he accused me of being resistant to change and suggested that I might be more comfortable working somewhere with a slower pace of innovation. His treatment of other experienced employees was equally dismissive. Carl Peterson, our facilities maintenance supervisor, had worked at the bank for 31 years and knew every pipe wire and ventilation system in the building. Tyler decided that facility management should be outsourced to a corporate service company. Diana Walsh, our security chief, had established relationships with local law enforcement and federal agencies that took decades to build. Tyler wanted to replace her with a digital surveillance system managed by an outside firm. The pattern was always the same. Tyler would identify someone over 40 as deadweight and systematically undermine their authority while building cases for their removal. He would exclude us from important meetings, assign our responsibilities to younger employees, and then point to our reduced involvement as evidence that we were not essential to the organization. The truly maddening aspect was how he presented these changes to upper management. Tyler was articulate, confident, and absolutely convinced of his own vision. When board members asked questions about the risks involved in such rapid transformation, he had polished presentations full of statistics about digital banking trends and cost savings projections. What those presentations never included was any acknowledgement of the institutional knowledge being lost. Tyler genuinely believed that anything important could be learned from manuals or transferred through brief training sessions. He had no concept that expertise was built through years of experience, through understanding the subtle interactions between different systems, through knowing how to solve problems that were not covered in any documentation. The breaking point came when Tyler announced his plan to completely replace our OrionTech mainframe with a modern cloud-based system called FlexiBank Pro. According to the sales materials, FlexiBank Pro could handle all of our transaction processing, customer account management, and regulatory reporting through a streamlined interface that required minimal training. During the presentation to the board, Tyler explained that the transition would save the bank approximately $4 million annually in maintenance costs and IT salaries. The new system would be faster, more reliable, and fully compliant with all current banking regulations. Implementation would take only 90 days, and the consulting firm guaranteed a smooth transition with no service interruptions. I sat in the back of that meeting room feeling like I was watching someone plan to demolish a bridge while standing on it. FlexiBank Pro might be an excellent system, but integrating it with our existing infrastructure would require months of careful testing and gradual migration. Our customer accounts contain transaction histories going back over 30 years. Our loan processing systems connected to 17 different credit reporting agencies. Our federal compliance reporting had to interface with systems at 12 different regulatory agencies. Tyler's plan called for switching everything over during a single weekend. On Friday evening, we would be running on OrionTech. On Monday morning, everything would be on FlexiBank Pro. When I raised concerns about this timeline, Tyler responded that modern systems were designed for rapid deployment and that my experience with antiquated technology was making me unnecessarily cautious. The consulting firm backed up Tyler's optimism with testimonials from other banks that had successfully implemented FlexiBank Pro. What they did not mention was that those banks were much smaller institutions with significantly less complex operations. First National was handling transaction volumes and regulatory requirements that were completely different from the community banks featured in their success stories. But the most dangerous aspect of Tyler's plan was his decision to begin dismantling OrionTech systems immediately. Rather than maintaining the old system as a backup during the transition, he wanted to start removing redundant infrastructure right away to demonstrate commitment to the new approach. Tyler had already scheduled contractors to begin disconnecting OrionTech components the evening after my termination. He was so eager to prove that his vision was superior that he was willing to eliminate any possibility of falling back to proven systems if problems arose. As I listened to him outline this plan to the board, I realized that Tyler was not just making a business mistake. He was creating conditions for a catastrophic failure that could destroy the bank entirely. But by that point, my credibility with upper management had been so thoroughly undermined that any warnings I offered would be dismissed as the desperate protests of someone trying to protect her job. The most tragic irony was that Tyler actually believed he was doing the right thing. He genuinely thought that he was saving the bank from stagnation and positioning it for future success. His confidence was so absolute that he could not even consider the possibility that his approach might be flawed. When the meeting ended and the board approved Tyler's modernization plan, I knew that I was watching the beginning of a disaster that could have been easily prevented with patience, planning, and respect for the complexity of the systems we had built. The final board meeting took place on a Tuesday morning in the executive conference room on the 23rd floor. The room had floor-to-ceiling windows overlooking downtown, and on a clear day like this, you could see all the way to the mountains. I had been in this room hundreds of times over my career, presenting system upgrades, security assessments, and strategic technology plans. Today felt different, though. Today felt like walking into an execution chamber. Tyler had spent the previous week building his case for immediate modernization. He had prepared a presentation that included cost analysis, implementation timelines, and glowing testimonials from the consulting firm he had hired. The board members already had copies of his proposal, and from the expressions on their faces, they were impressed by his thoroughness and confidence. I had prepared my own presentation, documenting the risks associated with rapid system replacement, and outlining a more cautious approach that would preserve operational stability while still achieving modernization goals. My proposal called for a phased transition over 18 months, with extensive testing and backup systems maintained throughout the process. When Tyler finished his presentation, the board members nodded approvingly. His plan was ambitious, innovative, and promised significant cost savings. Then it was my turn to present the alternative perspective. I stood up and began explaining the technical complexities involved in replacing core banking infrastructure. I showed them diagrams illustrating how our current systems connected to external networks, regulatory reporting systems, and customer service platforms. I explained that OrionTech was not just a computer system, but the foundation that everything else was built on. Tyler interrupted me after 10 minutes. He stood up, walked to the front of the room, and began what could only be described as a character assassination disguised as professional disagreement. According to Tyler, my presentation was a perfect example of the backward thinking that was holding First National back from achieving its full potential. I was so invested in preserving outdated technology that I could not see the opportunities that modern solutions offered. My resistance to change was exactly the kind of institutional inertia that successful companies had to overcome to remain competitive. He suggested that my concerns about system integration were based on outdated assumptions about how modern technology worked. Today's software was designed to be plug and play. Implementation teams were trained to handle complex migrations smoothly and efficiently. The problems I was worried about were the kinds of issues that might have been relevant 10 or 15 years ago, but they simply did not apply to current generation systems. Tyler then moved into more personal territory. He questioned whether someone with my background was really qualified to evaluate modern banking technology. My expertise was built around systems that were older than some of the employees in the bank. While my historical knowledge might have value in a museum, it was actually counterproductive in a business environment that needed to embrace innovation. The board members shifted uncomfortably in their chairs as Tyler's critique became increasingly harsh. He suggested that the bank had been carrying too many employees who were comfortable with the status quo, but unwilling to adapt to changing business requirements. Successful organizations, he explained, needed to make difficult decisions about human resources that supported their strategic objectives. When Tyler finished his attack, the room was completely silent. I looked around the table at board members I had worked with for years, people who had previously valued my expertise and judgment. Their faces showed a mixture of discomfort and resignation. They clearly did not enjoy watching this confrontation, but they also seemed convinced that Tyler represented the future while I represented the past. I tried to respond to his criticisms with facts and data. I pulled out documentation showing the complexity of our current system integrations. I cited examples from other banks that had experienced serious problems during rapid system transitions. I explained that my concerns were not based on resistance to change, but on understanding the technical realities involved in managing complex financial infrastructure. But Tyler had already won the battle for the board's attention. When I spoke, they listened politely, but without real engagement. When Tyler responded to my points, they leaned forward and took notes. The dynamic in the room had shifted completely. Tyler's final argument was the most devastating. He suggested that keeping employees who were fundamentally opposed to the bank's modernization strategy would sabotage the success of the entire initiative. Even if I remained with the organization, my negative attitude would influence other employees and create resistance to necessary changes. The solution Tyler proposed was to make a clean break with legacy thinking and legacy personnel. The bank needed to demonstrate its commitment to innovation by ensuring that the implementation team was composed entirely of people who embraced modern approaches to banking technology. At that point, Jonathan Mason Tyler's father and the bank's CEO spoke up for the first time during the meeting. He said that while my contributions to the bank over the years had been significant, the board needed to support management's vision for the future. The technology sector was evolving rapidly, and organizations that failed to keep pace would be left behind by their competitors. Then came the moment that would replay in my mind for weeks afterward. Tyler looked directly at me and delivered the words that crystallized everything that was wrong with his approach to leadership and business strategy. "You are too old, Aspen. We need fresh blood." The silence that followed was deafening. Several board members stared at their papers, clearly uncomfortable with Tyler's blunt statement, but unwilling to challenge it. I felt something break inside me that had nothing to do with losing my job and everything to do with being reduced to nothing more than my age by someone who had never bothered to understand what I actually contributed to the organization. I stood up slowly, gathered my materials, and walked toward the door. As I reached for the handle, I turned back to face the room full of people who had just witnessed my professional execution. I said that I hoped their modernization project would be successful and that the bank would continue to serve its customers effectively. Then I left, walking down the hallway past offices and workstations where I had spent over half my adult life building something I had believed would outlast my own career. The human resources meeting that followed was brief and efficient. My voluntary resignation would be effective immediately. I would receive standard severance pay equal to 6 weeks of salary, but my health insurance and other benefits would end at the close of the business day. Security would escort me to my office to collect personal belongings, and my access cards would be deactivated before I left the building. Packing 27 years of career memories into cardboard boxes was surreal. Awards, commendations, photographs from company events, training certificates, and personal items that had accumulated over decades of dedication to an organization that had just discarded me without a second thought. The security guard who escorted me out was apologetic. He had worked at the bank for 12 years and remembered when I had helped restore systems after a power outage that could have shut down operations for days. He said that everyone knew I was being treated unfairly, but no one was willing to speak up and risk their own positions. As I loaded boxes into my car in the parking garage, I noticed Tyler watching from his office window 23 floors above. He seemed satisfied with his victory, confident that he had removed an obstacle to his grand vision for transforming First National into a modern banking powerhouse. What Tyler did not know was that his contractors were already in the building, preparing to begin dismantling the OrionTech infrastructure that very evening. His timeline was so aggressive that he could not afford to wait even a few days to begin implementing his plan. The final irony was that Tyler had just eliminated the one person who could have guided his modernization project safely through the technical challenges that lay ahead. In his determination to clear out dead weight, he had thrown away institutional knowledge that could not be replaced by consulting firms or new graduates, no matter how talented they might be. I spent that first evening at home sitting in my kitchen, staring at the cardboard boxes I had carried in from the car. 27 years of professional life reduced to personal mementos and documentation that apparently no longer had any value to the organization I had served so loyally. Sleep was impossible. Every time I closed my eyes, I imagined the contractors working in the server room, disconnecting systems they did not understand, removing safeguards they could not identify, and making changes that would have consequences they could not predict. I knew exactly what they were doing because I had helped design the protocols for system maintenance and upgrades. The difference was that those protocols assumed the work would be supervised by someone who understood how everything fit together. Around midnight, I gave up trying to sleep and started checking financial news websites. There were no reports of problems at First National, which meant either the contractors were being more careful than I expected, or any issues had not yet manifested in ways that would be visible to external observers. At 3 a.m, I made coffee and sat at my computer, reading through technical documentation I had brought home over the years. Much of it was material I had written myself, describing the security protocols and system integrations that kept First National's operations running smoothly. Looking at those documents now felt like reading love letters to a relationship that had ended badly. My phone started buzzing at 5:30 in the morning with news alerts from financial websites and banking industry publications. The first headline made my stomach drop: Major banking crisis, First National systems down nationwide. I turned on the television to find live news coverage already underway. A reporter was standing outside the main branch downtown, explaining that First National Bank had experienced a complete system failure sometime during the early morning hours. ATMs were not functioning online, banking was inaccessible, and branches across the country were unable to process any transactions. The impact was already spreading beyond First National's own customers. Because the bank served as a transaction processor for smaller community banks and credit unions, hundreds of other financial institutions were also experiencing service interruptions. Customers who had nothing to do with First National were discovering that their debit cards would not work and their paychecks could not be deposited. Federal banking regulators had been notified and were dispatching emergency response teams to assess the situation. The FDIC was preparing contingency plans to protect customer deposits, and the Federal Reserve was monitoring potential impacts on the broader financial system. As I watched the news coverage, I felt a complex mixture of emotions that I struggled to understand. Part of me was horrified by the scope of the crisis and worried about the millions of customers who were being affected. But another part of me felt a grim satisfaction at seeing Tyler's overconfidence exposed so dramatically and so quickly. The technical analysis part of my mind was already working through what had probably happened. The contractors had most likely damaged OrionTech's core authentication module while attempting to disconnect what they assumed were redundant backup systems. The authentication module controlled access to customer account data transaction processing capabilities and regulatory reporting functions. Once that module failed, security protocols would have automatically shut down related systems to prevent data corruption or unauthorized access. What Tyler and his consultants probably did not realize was that OrionTech's security architecture was designed with multiple layers of interdependent protections. Disabling one component would trigger protective shutdowns in other components, creating cascading failures that could spread throughout the entire network. The reporters were interviewing banking industry experts who were struggling to explain how a major financial institution could experience such a comprehensive system failure. Most modern banks had backup systems and disaster recovery protocols that should have prevented this kind of total shutdown. What the experts did not understand was that First National's disaster recovery systems were built around the assumption that OrionTech would remain operational as the foundation for emergency procedures. If OrionTech itself was compromised, many of the backup systems would be unable to function properly. By 7 a.m, the crisis had escalated beyond anything I could have imagined. The failure was not just affecting First National. It was bringing down the entire regional banking consortium's network, threatening to trigger a nationwide financial crisis involving 12 major banks and millions of customers. The Regional Banking Consortium was a cooperative arrangement that allowed member banks to share transaction processing capabilities and provide backup support for each other during emergencies. First National served as the primary technical coordinator for this consortium, using OrionTech's sophisticated networking capabilities to manage data exchanges between member institutions. When OrionTech failed, it took down not just First National's own operations, but also the communication links that connected the other consortium members. Banks in 7 states were reporting transaction processing problems, and the situation was getting worse as customer demand increased during normal business hours. The stock market opening had been delayed while financial regulators assessed the potential for broader systemic disruption. Congressional leaders were calling for emergency hearings to investigate how such a critical piece of financial infrastructure could fail so catastrophically. I found myself thinking about all the warnings I had tried to give over the past 6 months. Not just about the risks of rapid system replacement, but about the importance of understanding how complex networks functioned before making changes to them. Tyler had dismissed these concerns as resistance to innovation, but they were actually based on decades of experience with exactly these kinds of interconnected systems. The most frustrating aspect was knowing that this crisis was completely preventable. With proper planning, adequate testing, and respect for the complexity of existing infrastructure, the modernization project could have proceeded safely over a period of months or years. Instead, Tyler's determination to prove himself had created a disaster that would damage First National's reputation for decades and potentially destroy the careers of hundreds of innocent employees. As morning turned into afternoon, the scope of the crisis continued to expand. Federal banking authorities were now treating this as a potential threat to national financial security. Emergency response teams from multiple agencies were coordinating efforts to restore basic banking services before the situation triggered panic among consumers. The irony was impossible to ignore. Tyler had fired me for being too old and out of touch with modern technology, but the crisis he had created could only be solved by understanding the outdated systems he had been so eager to replace. The cutting-edge consulting firms and brilliant young graduates he had hired were completely helpless in the face of technology that predated their educational experience. Watching the news coverage, I realized that my phone would probably ring soon. Tyler would have no choice but to swallow his pride and ask for help from the person he had humiliated just 24 hours earlier. The only question was how long his ego would hold out against the mounting pressure from federal regulators, angry customers, and panicked board members. When my phone finally buzzed with an incoming call, I looked at the display and saw Tyler's number. I let it go to voicemail. Then I sat back in my kitchen chair, sipped my coffee, and prepared to negotiate from a position of strength for the first time in months. By 7 in the morning, Tyler Mason was experiencing the kind of panic that comes from watching your career implode in real time on national television. The main conference room at First National had been transformed into a crisis command center, with laptops, phones, and emergency communication equipment scattered across tables that 12 hours earlier had been the site of my professional execution. Federal banking regulators had arrived at 6:30, led by a stern woman from the Office of the Comptroller of the Currency, who made it clear that if basic banking services were not restored within 24 hours, First National would face immediate closure and federal takeover. The FDIC representative was equally blunt about the potential for customer lawsuits that could reach into the billions of dollars. Tyler had assembled every technical expert he could find, starting with the consulting firm that had recommended the FlexiBank Pro transition. The lead consultant, a 30-year-old graduate from Berkeley, spent 2 hours examining the OrionTech systems before admitting that his team had no experience with mainframe architecture from the 1980s. The contractors who had performed the previous evening's system modifications were equally useless. They had followed Tyler's instructions to disconnect what they assumed were obsolete backup components, but they had no understanding of how those components integrated with the overall network architecture. When asked to simply reverse their changes, they explained that they had not documented their work in sufficient detail to restore the original configuration. IBM had dispatched a team of specialists from their legacy systems division, flying experts in from New York, Chicago, and Atlanta. These technicians had extensive experience with OrionTech hardware and software, but they quickly discovered that First National's installation had been so heavily customized over the years that their standard diagnostic procedures were ineffective. The IBM team leader, a 20-year veteran named Patricia Coleman, delivered the assessment that Tyler had been dreading. OrionTech's security protocols had been modified with proprietary code that was not documented in any of IBM's technical manuals. The authentication modules that controlled access to customer data appeared to have been custom designed specifically for banking applications, using security algorithms that were more sophisticated than anything IBM had seen in commercial installations. Restoring system functionality would require either complete documentation of these custom modifications or access to the original programmer who could explain how the security architecture was supposed to work. Since First National's technical documentation had been stored on the OrionTech system itself, and that system was now inaccessible, finding external documentation had become critical to any recovery effort. Tyler's father, CEO Jonathan Mason, had cut short his golf vacation in Florida and was flying back to personally oversee the crisis response. The phone calls Tyler was receiving from his father were becoming increasingly hostile as the scope of the disaster became clear. Board members were demanding explanations for how a simple system upgrade had turned into a potential bank closure. The media circus outside the building was growing by the hour. Financial reporters from major networks were broadcasting live updates about the crisis, interviewing banking experts who speculated about the broader implications for the financial industry. Some commentators were already comparing the situation to major financial disasters from previous decades. Customer service lines were overwhelmed with calls from panicked account holders who could not access their money or complete routine transactions. Branch managers were reporting angry crowds of customers demanding immediate resolution to problems that the bank was powerless to fix. Social media was filling with complaints, threats, and demands for federal intervention. The regional banking consortium crisis was escalating independently of First National's internal problems. 11 other major banks were now experiencing varying degrees of transaction processing failures because their systems could not communicate with First National's network coordination functions. The Federal Reserve had activated emergency protocols to maintain basic interbank communication, but these backup systems were not designed to handle the full volume of normal banking operations. Congressional representatives from affected states were calling for immediate hearings to investigate how critical financial infrastructure could be so vulnerable to single points of failure. The House Financial Services Committee was preparing to demand testimony from First National's leadership about the decisions that had led to this crisis. By noon, Tyler was facing the reality that none of his high-priced experts could solve the technical problems that were destroying the bank. The consulting firm was suggesting that the only viable solution might be to completely rebuild the customer database from archived records, a process that could take weeks or months and would require shutting down all banking operations during the reconstruction. The federal regulators rejected this option immediately. Closing First National for weeks would trigger bank runs at other institutions and potentially destabilize the entire regional banking system. They needed a solution that would restore basic functionality within hours, not months. Patricia Coleman from IBM delivered the assessment that finally forced Tyler to confront his situation honestly. In her opinion, the custom security protocols that protected First National's customer data were actually quite sophisticated and well-designed. The authentication systems had multiple layers of protection that were more advanced than anything currently available from commercial vendors. The problem was that these systems had been designed by someone who clearly understood both advanced computer security and the specific requirements of banking operations. This was not the kind of work that could be reverse-engineered quickly, even by experienced technicians. It required knowledge of the original design philosophy and an understanding of how the various components were intended to work together. When Tyler asked if IBM could recommend any outside experts who might be able to help, Patricia's answer was devastating. In her experience, custom security systems of this sophistication were typically designed by only one or two people who retained detailed knowledge of the implementation. If First National had employed such a person, that individual would be the most qualified to assess the current problems and recommend solutions. Tyler knew exactly who Patricia was talking about, but admitting that he had fired the one person who could solve the crisis would be professional suicide. Instead, he spent the afternoon desperately searching for alternative solutions, contacting every technology consultant and banking systems expert he could find. The responses were uniformly discouraging. Several consultants agreed to examine the problems, but none were willing to guarantee results or provide realistic timelines for restoration. Most were honest enough to admit that debugging custom mainframe security systems was beyond their expertise, especially under emergency conditions with federal regulators demanding immediate solutions. As afternoon turned into evening, a second cascade failure occurred when Tyler authorized another team of contractors to attempt restoring the OrionTech systems to their previous configuration. These contractors, working from incomplete documentation and under extreme time pressure, made additional changes that triggered OrionTech's built-in security lockdown protocols. The lockdown protocols were designed to protect customer data in the event of suspected unauthorized access attempts. Once activated, they required specific authorization codes and authentication procedures to restore normal operations. These protocols had been implemented as a safeguard against exactly the kind of unauthorized system modifications that had caused the original crisis. The security lockdown made the situation exponentially worse and potentially irreversible without access to the original authorization procedures. Tyler was now facing the possibility that even if he could find qualified technical help, the window for recovery might have already closed. As evening approached and financial markets prepared to open in Asia, Tyler realized that he had exhausted all of his options except the one he had been trying to avoid. The consulting firms had failed. The IBM specialists had failed. The emergency contractors had made the situation worse. The only remaining possibility was to contact the person who had designed these systems in the first place, the person who understood exactly how they were supposed to work, and the person he had humiliated and fired just 36 hours earlier. Tyler stared at his phone, knowing that the call he was about to make would end any possibility of salvaging his reputation or his career. But with federal regulators threatening bank closure and his father demanding immediate solutions, he no longer had the luxury of protecting his ego. The cost of his pride was about to become very expensive. At 7:45 on Wednesday morning, my phone rang with a call from Tyler Mason. I had been expecting it, but I let it go to voicemail anyway while I finished my coffee and considered exactly how I wanted to handle this conversation. The voicemail was brief and carefully worded. Tyler said there had been some technical difficulties with the system transition, and he wondered if I might be available for a brief consulting conversation about OrionTech configuration issues. I waited 20 minutes before calling him back long enough to demonstrate that I was not desperately waiting by the phone, but not so long as to appear unprofessional. When Tyler answered, His voice had lost all of the arrogant confidence I remembered from our previous interactions. He sounded exhausted, stressed, and desperate, though he was trying hard to maintain some semblance of authority. Tyler began by explaining that the bank was experiencing some unexpected complications with the modernization project. The new systems were not integrating as smoothly as anticipated, and they were having trouble accessing certain legacy data files. He wondered if I might be willing to come in for a few hours to help resolve some configuration issues with the OrionTech interface protocols. I listened to his carefully crafted explanation without interrupting, enjoying the way he was trying to minimize the scope of the crisis, while simultaneously begging for my help. When he finished, I asked him to describe the specific technical problems they were encountering. Tyler's response revealed the full extent of his desperation. The entire OrionTech system was offline, he admitted. Customer account data was inaccessible. Transaction processing had been shut down for over 24 hours. Federal regulators were threatening bank closure. The regional banking consortium was experiencing cascading failures, and none of the technical experts he had hired could figure out how to restore basic functionality. I asked Tyler to walk me through exactly what changes had been made to the OrionTech configuration. As he described the contractor's work, I could hear the panic growing in his voice as he realized that he was confessing to authorizing modifications to systems he did not understand, performed by people who were equally ignorant of the potential consequences. The security lockdown protocols had been triggered, Tyler explained, and now the system was requiring authorization codes that no one at the bank seemed to possess. The IBM specialists thought these codes might be stored in technical documentation that had been archived somewhere, but they could not locate any records that contained the necessary information. I explained to Tyler that the authorization codes he was looking for were not stored in any documentation. They were derived from algorithms that I had designed specifically to prevent unauthorized access during emergencies. The codes changed automatically based on date and time calculations, which meant that even if someone found old documentation, it would not contain the current authorization sequence. Tyler asked if there was any way to bypass the security lockdown or override the authorization requirements. I told him that the system had been designed specifically to prevent such bypasses. The whole point of the security architecture was to ensure that only authorized personnel could make changes to customer data or transaction processing capabilities. When Tyler asked who was authorized to provide the necessary codes, I let him work through the logic himself. The system had been designed by a team of 3 people in the early 1980s. 2 of those people had retired from the banking industry years ago and had moved to other careers. The third person was the one who had maintained and updated the security protocols over the past 27 years. I could hear Tyler struggling with the words as he asked if I would be willing to return to the bank as a temporary consultant to help resolve the current crisis. I told him that I would need to understand the scope of the engagement before making any commitments. Based on what he had described, this was not a simple configuration issue that could be resolved in a few hours. Tyler asked what I thought it would take to restore full system functionality. I explained that the immediate priority would be restoring basic transaction processing capabilities and customer account access. That could probably be accomplished within 3 to 4 hours, assuming the system lockdown had not caused any data corruption. However, the larger problem was that Tyler's modernization project had created multiple vulnerabilities throughout the bank's technical infrastructure. Even after restoring immediate functionality, a comprehensive security assessment would be necessary to identify and correct problems that could cause future failures. Tyler asked about my consulting rates for this kind of emergency technical support. I told him that emergency system recovery consulting typically ran $25,000 per hour, with a 5-hour minimum engagement for any project involving federal regulatory requirements and potential bank closure. I could hear Tyler choking as he processed this information. At $25,000 per hour, even the minimum engagement would cost $125,000. If the comprehensive security assessment took longer, the consulting fees could easily reach several $100,000. Tyler tried to negotiate, suggesting that we could work out some kind of reduced rate arrangement or payment schedule. I reminded him that every hour of delay was costing the bank millions of dollars in lost revenue customer lawsuits and regulatory penalties. My consulting fee was actually quite reasonable compared to the cost of continued system downtime. Furthermore, I continued this engagement would need to include certain conditions beyond the financial compensation. I would require a public acknowledgement from bank leadership that the current crisis was caused by inadequate planning and insufficient respect for the complexity of existing systems. This acknowledgement should include a formal apology for the discriminatory treatment that had led to the loss of critical institutional knowledge. Tyler started to object, but I cut him off. I also required written guarantees that the bank would implement comprehensive age discrimination training for all management personnel and establish clear policies protecting older employees from the kind of treatment I had experienced. Additionally, the bank would need to commit to a more responsible approach to system modernization, with proper testing, gradual implementation, and retention of backup systems throughout any transition period. And finally, I wanted a long-term consulting contract to provide ongoing technical oversight and ensure that similar crises would not occur in the future. Tyler asked if these conditions were negotiable. I told him that they were absolutely not negotiable, and that frankly, given the scope of the crisis he had created, my demands were quite reasonable. I reminded him that federal regulators were threatening bank closure, which would cost thousands of jobs and potentially billions of dollars in economic disruption. As we spoke, Tyler was receiving urgent text messages and phone calls from federal regulators, board members, and his father. I could hear the chaos in the background as bank employees struggled to manage a crisis that was spiraling further out of control with each passing hour. Tyler finally agreed to all of my conditions, though I could hear the humiliation in his voice as he accepted terms that completely reversed the power dynamic between us. I told him that I would need written confirmation of our agreement before beginning any work, and that the consulting contract would need to be signed by the bank's CEO and board chairman. I also informed Tyler that I could fix the primary system failures within 3 hours, but the real issue was preventing future disasters. The bank needed a comprehensive review of all technical systems, updated documentation, proper training for technical staff, and ongoing oversight to ensure that institutional knowledge was preserved rather than discarded. Tyler asked when I could begin work. I told him that I would review the written contracts this afternoon and could begin the emergency system recovery tomorrow morning, provided all of my conditions were met and the consulting fees were paid in advance. As I hung up the phone, I realized that this crisis had accomplished something that 27 years of dedicated service had never achieved. For the first time in my career, the true value of expertise and institutional knowledge was being measured in terms that the business world could understand, dollars and cents. Tyler Mason had wanted to prove that fresh blood was more valuable than experience. Instead, he had created a situation where experience was literally the only thing standing between First National Bank and complete destruction. The irony was perfect, and the justice was about to be very expensive. Thursday morning felt like stepping onto a movie set where I was the lead actor in a story about professional vindication. I walked through the front doors of First National Bank at exactly 8 o'clock, carrying my original OrionTech documentation and wearing the same professional confidence that had sustained me through 27 years of building and maintaining systems that everyone else had taken for granted. The media circus outside was unlike anything I had ever seen. News trucks from major networks lined the street. Reporters were broadcasting live updates about the banking crisis, and federal regulatory vehicles filled the parking areas usually reserved for customers. Security guards who had escorted me out of the building just 3 days earlier now welcomed me back with apologetic smiles and grateful handshakes. Tyler was waiting in the lobby, looking like he had not slept in 48 hours. His perfectly styled hair was disheveled, his expensive suit was wrinkled, and his eyes had the hollow look of someone who had watched his career disintegrate in real time. He greeted me with a mixture of desperation and humiliation that would have been satisfying if the situation had not been so serious. Federal regulators had taken over the main conference room, and I was briefed on the current status of the crisis before beginning any technical work. The regional banking consortium failures had escalated to involve 14 major banks across 9 states. Customer lawsuits were being filed hourly, with damage estimates already exceeding $2 billion. Congressional hearings were scheduled to begin the following week, with bank leadership expected to provide testimony about the causes of the crisis. The technical assessment confirmed my worst expectations. The contractors had not just damaged individual components of the OrionTech system. They had fundamentally disrupted the integration protocols that connected customer accounts, transaction processing, regulatory reporting, and security monitoring. Restoring basic functionality would require rebuilding these connections systematically, testing each component to ensure data integrity, and verifying that security protocols were operating correctly. I began work in the main server room surrounded by IBM specialists, federal technical advisors, and bank executives who watched my every move with the kind of attention usually reserved for neurosurgery. As I accessed authorization protocols that I had designed decades earlier, I felt the familiar satisfaction of working with systems that responded predictably to someone who understood their logic. The first breakthrough came after 90 minutes when I successfully restored access to the customer account database. Cheers erupted from the observation area as account information became visible for the first time in over 60 hours. Federal regulators immediately began verifying that customer data was intact and that no unauthorized access had occurred during the system failures. Transaction processing capabilities were restored after another hour of careful work. I methodically re-established connections between OrionTech and the external networks that handled credit card processing, electronic transfers, and interbank communications. Each successful connection was celebrated like a touchdown at the Super Bowl, with executives and regulators applauding as critical banking functions came back online. The most complex challenge was restoring the regional banking consortium coordination functions. These systems required not just technical repairs, but careful synchronization with networks at other member banks. I spent 45 minutes on conference calls with technical teams across the country, walking them through procedures for safely reconnecting their systems to First National's restored network infrastructure. By noon, basic banking operations were fully functional. ATMs were processing transactions online, banking was accessible, and branches across the country were handling customer requests that had been impossible for the previous 3 days. The immediate crisis was over, but the real work was just beginning. My comprehensive security assessment revealed dozens of vulnerabilities that Tyler's modernization attempts had created throughout the bank's technical infrastructure. Password protocols had been weakened, backup systems had been disconnected, and monitoring capabilities had been disabled. Fixing these problems would require weeks of careful work and extensive testing to ensure that similar failures could not occur in the future. The media coverage of my role in resolving the crisis was unlike anything I could have imagined. Financial news networks were describing me as the banking crisis hero who had saved the national financial system from potential collapse. Technology publications were analyzing the lessons learned from First National's near disaster, emphasizing the critical importance of institutional knowledge in complex technical environments. Tyler's public apology was broadcast live on multiple financial news networks. Standing at a podium outside bank headquarters, he acknowledged that inadequate planning and insufficient respect for existing systems had caused the crisis. He specifically apologized for the discriminatory treatment that had led to the loss of critical expertise, and he announced new policies designed to protect and value experienced employees. The congressional testimony that followed was a watershed moment for discussions about age discrimination in the technology sector. I spent 6 hours explaining to the House Financial Services Committee how institutional knowledge develops over decades of experience and cannot be replaced by consulting firms or recent graduates, regardless of their qualifications. Federal investigations revealed that First National's crisis was part of a broader pattern of age discrimination in financial services companies. My case became a catalyst for industry-wide reforms, including mandatory training programs, revised hiring practices, and new policies requiring comprehensive transition planning when experienced employees retired or left the organization. The Institutional Knowledge Preservation Program that I developed became a model for other companies struggling to balance modernization with operational stability. The program documented critical systems, identified key personnel with irreplaceable expertise, and established mentorship relationships between experienced employees and younger colleagues. Tyler's career never recovered from the crisis he had created. After completing his demotion to junior analyst, he left the banking industry entirely and eventually found work at a small consulting firm that specialized in helping companies avoid the kinds of mistakes that had destroyed his reputation. His father, CEO Jonathan Mason, retired early to escape the ongoing scrutiny and criticism from federal regulators and industry analysts. My consulting practice expanded rapidly as other companies recognized the value of preserving institutional knowledge while pursuing modernization goals. I worked with banks, insurance companies, and government agencies to assess technical risks, document complex systems, and develop transition plans that balanced innovation with operational stability. The personal transformation was equally significant. For the first time in my career, I felt truly confident in advocating for myself and other experienced professionals. I became a speaker at industry conferences, sharing lessons about the hidden costs of age discrimination and the business value of respecting expertise, regardless of the age of the person who possesses it. First National Bank became a model for age-inclusive practices in the technology sector. The bank's new policies emphasized mentorship, knowledge transfer, and gradual transition planning that preserved institutional expertise while embracing beneficial innovations. Productivity increased, employee satisfaction improved, and the bank's reputation for technical excellence was restored. But the most meaningful change was the shift in how organizations throughout the industry thought about the relationship between experience and innovation. The First National crisis demonstrated that true progress requires building on existing knowledge rather than discarding it in favor of untested approaches. The life lesson that emerged from this experience extends far beyond the banking industry or even the technology sector. In our rush to embrace everything new and modern, we often forget that wisdom and expertise are accumulated over years of dedicated effort and cannot be replaced by enthusiasm and credentials alone. Every organization, every industry, and every community contains people whose knowledge and experience represent irreplaceable resources. These individuals have made mistakes, learned from failures, and developed insights that cannot be taught in classrooms or acquired from textbooks. When we dismiss them as outdated or irrelevant, we lose access to understanding that took decades to develop. True innovation happens when new ideas are built on solid foundations of existing knowledge. The most successful modernization efforts respect the past while embracing the future, recognizing that progress is achieved through evolution rather than revolution. The cost of Tyler's arrogance was measured in billions of dollars and thousands of disrupted lives. But the broader cost of age discrimination is measured in lost opportunities, wasted expertise, and preventable failures that occur when organizations discard wisdom in favor of perceived innovation. Have you ever witnessed age discrimination in your workplace or seen valuable experience dismissed in favor of youth and enthusiasm? I would love to hear your thoughts about how organizations can better balance respect for expertise with the need for innovation and change. Thank you for listening to my story, and I hope it encourages you to value the institutional knowledge and hard-earned wisdom of experienced professionals in your own career and community. If this story resonated with you, please like this video, subscribe to the channel for more stories about workplace justice and personal triumph, share it with others who might benefit from hearing about the real value of experience and expertise, and comment below with your own experiences or thoughts about creating more age-inclusive workplaces. Remember that every person's career journey has value, and the knowledge gained through years of dedicated effort deserves respect regardless of how old or young the person might be who possesses it. Until next time, keep fighting for fairness, and never underestimate the power of experience combined with determination.